Dump this now. I'm your host, Steve Metre, and thanks for joining me today. In our lead story today, it's Morgan Stanley's urgent warning. This indice is going to come crashing down, and if it's in your portfolio, you need to get rid of it. I'll show you what Morgan Stanley says you need to get out of, and what, more importantly, you need to be buying. In the show that makes you money, which is why every Sunday we like to look at the technicals, momentum, and machine positioning in the markets to help you be a better trader and investor. Now let's head over to Bloomberg, where he picked today's story up with the headline is Morgan Stanley sees momentum behind China indices, well, fading as they've now gone overbought, and investors shouldn't chase recent gains further at the index level, strategists at the U.S. Bank said, as they recommend instead pursuing a single stock or thematic opportunities given improved investor sentiment. They're suggesting that global investors' positioning have already improved. Meanwhile, there's less urgency to diversify. Here's the key from the U.S. and Japanese markets, given the geopolitical, yield, and currency factors that are abating or reversing. We see near-term technical overbought signals, which could deter further buying by global quant funds, suggesting if this is in your portfolio, you need to get out of it. But not to worry, we'll give you all the things you should be looking at and the case for as a rebound in Chinese equities from multi-year lows is stoking optimism that the market has bottomed, with analysts at Goldman saying that a fear of missing out is building among traders who might chase these higher, but market watchers remain divided, with some pointing to weak earnings growth and a deflating property sector as reasons to stay on the sideline. And those are good reasons as well, because we note that China's economy is deflating. That will not be good over the longer term for the equity markets, particularly when it's overbought. But where can you look to diversify? Well, Morgan Stanley suggests U.S. equity markets, and for good reason. Let's take a look at the Goldman Sachs Tactical Flow of Funds report, and here we can see that there's new supply and demand equity technical mismatch. It's now a tailwind, suggesting U.S. equities could go higher as seasonals are favorable. The largest buyer is back. We'll take a look at U.S. corporates. Keep in mind, even Griffin Digital, you can find them on the NASDAQ under symbol GRYP, is one of those companies. And we have seen equity CTAs now firmly on the buy side, which we warned would happen, and it started a green sweep where the demand in every scenario is coming. And here you can see that stock of Griffin Digital, again, GRYP. You can see they made a bottom, then a higher low, and another one. And look at this on the announcement, of course, that corporate share buyback is coming back. You see volume increasing, a potential breakout up here to the supply zone of a 14.5% return. Stay tuned to the end of the show. We'll look at some more charts, because here we can see those buyback windows are now open, and there have been $550 billion worth of authorizations year to date. That's the third best on record. And here we can see the execution desk at Goldman has 40% higher than this time last year. That means, of course, there's $5.5 billion worth of volume weighted average price demand favoring the best and largest market cap companies. One of those now, of course, they're not one of the biggest companies, but Griffin Digital on the list of the corporate share buybacks. That's going to be huge, as we know that companies, when they announce buybacks, their stocks tend to go higher. And what's on the back of that is the CTAs. These are the machines that trade price level and momentum, are going to chase the market higher. We suggested that they were in short positions looking to reverse. We're now seeing that catalyst. Again, what was the big buyer? Well, it's corporates. They're back. Here you can see a flat tape, 24 billion of global equities, 18 billion into the U.S. This over the next week. Up tape, buyers in global equities. You notice it's bigger, 60 billion versus 31 into the U.S. Down tape, they're sellers, but right now, no signs that that's going to trigger. And here you can see the risk parity and volatility control strategies have reduced exposure. But here's the key side to this chart is they overshot to the downside. And of course, we've noted that in our own reports, that when machines get offsides, it's opportunity for you, and in a big way, which is why Morgan Stanley is saying, why chase Chinese equities higher when they're overbought? There are other opportunities. And yes, they're right here at home. And the seasonality looks good too, according to Goldman. The mid-May to mid-June seasonal period during election years, well, it turns out to be very strong, as of course investors look to buy ahead of who they think is going to win the election. Now let's take a look at our screens here. We have the S&P 500. We're going to look at symbol SPY, and this is the largest traded ETF. Momentum is positive. Now, if you were wondering how you knew to get ahead of that machine positioning, we told you. We have this bar right here. You see that this is our CTA Time Pro. We look at fast algorithms and slow algorithms, and what happened. If you go back and look at the last couple of weeks, we noted that turnaround. We showed you when it was going to happen. We showed you the opportunity there. And again, you can find links to that report in the description below. There's a 30-day free trial. Check out Griffin Digital, GRYP, while you're there. And what do we know? The relative strength index, a momentum indicator, is moving up. It's at 62, come off of oversold territory. The MACD, moving average convergence divergence, has a positive cross. So you're seeing, of course, momentum head higher. But what if you weren't sure about that? Well, we have Momentum Timer Pro. This is another report that looks at daily momentum, 1, 3, and 6 month as well. We noted that turnaround. You can see it here in the dailies. This to our subscribers. For both reports, we flagged a buy it open back on April 30th. That trade is now up 2.41%. We're raising our stop loss level as Friday's closing now is within shot of that all-time highs. Let's take a look at the chart here, because one of the key things is we make trading easy. We make investing easy. We give you all the tools you need every week. And if you're a subscriber, well, you get them every day on how to make money in the markets. And here you can see, no, not many people wanted to buy this, and we can see volume declining. They were afraid. Now is eye shot up that all-time high. Let's zoom in here to the 10-day window, and you see this volume profile. This is where the most number of shares have been traded over a period of time. You see buyers clearly below. Let's zoom out to the 30-day window. Buyers clearly below. How do you know? You can see buyers came in, buyers came in, buyers came in. And what is the big buyer now? Well, it's corporates, and they've got a lot of shares to buy back in a short period of time here, and that's going to be a huge catalyst for the markets. It's at least likely to touch a all-time highs. Whether it breaks out or not sure, but how do you control your downside risk? Use your stop losses when you're in the trade. Make sure you raise them, particularly when you make money. Downside target 50-day moving average. Let's take a look at the NASDAQ. Momentum also positive here. How do we know that? Well, again, RSI is rising off of oversold territory. MACD's got a positive cross. Our own momentum indicator, because what we do is unique. We add a proprietary overlay, and it makes these trades clearer, simpler, and you stay in them longer and make more money. That's the key. You see, we have those buy signals. That trade we flagged last week with a buy it open on May 6th. That trade is now up 1.09%. We've got our stop loss level at our open just to make sure we hold on to, of course, to our money here, flirting with those all-time highs that are now, again, same with the S&P, within eye shot of where we're sitting at right now. Let's take a look at the charts here of the NASDAQ, and what we're going to see is something very similar in terms of that volume profile. Here on that 30-day chart, you can see buyers clearly underneath here, and now those corporates are back in a big way. Here you can see on the 10-day, they are there as well. But look at this, even on the 6-month window, the corporates there are now holding this. Look for a run to the all-time highs, and maybe even a potential breakout from there, and that would be absolutely huge. But again, how do we know all this? Well, one thing we do, of course, with that machine positioning, we run a historical overlay, and that tells you when the machines are offsides, we give you the edge. Buy before they do, and sell before they sell. It is that simple, and use, of course, those stop losses to control your risk. Let's talk about small caps here, because momentum is positive. Again, we see the relative strength indicator moving up, MACD moving up, our Momentum Timer Pro, 10 consecutive daily buy signals. Look, we make it that easy for you. We flag the trades for you with videos when they come out. That was a buy it open on April 30th. That trade now up 3.13%. And this one's got a lot of upside potential. You'll note we're raising our stop loss level to keep us in the green here. And this, again, is flying up toward that 6-month high. We'll take a look at that. This is a very clean setup here on the small caps, and it looks like it could go to that 6-month high and maybe even beyond there. Here we click on that and let's take a look. Buyers came down in here at that 6-month volume profile. We flagged that. We noted this to our subscribers when it hit the reports. Here you can clearly see 90 days. Buyers down right in here. This is absolutely gorgeous. 30 days. They're right here. They're fighting with it. And where are they looking to break out is get up here to that 6-month window. And you can see again, this was flagged off of oversold conditions to our subscribers. It was beautiful. You zoom out over the last 2 years and you see that 6-month window. Well, we've got to go a little farther because if it breaks through that, and you can see all this buying coming right underneath here, now you're taking a shot of small caps just shooting straight higher. Again, we give you the tools where to be. Morgan says get out of China. Well, we're saying where you need to get into. That is, of course, right now, U.S. equities on the back of those buybacks. But one place that you may not want to be, that is the energy sector. Let's take a look at XLE here, because momentum has gone negative. We flagged this last week. We told you sell signals were popping up on this RSI, decelerating MACD negative cross. And notably, what we see is a possible upside target here because we see the machine coming back and buying on the fast algorithm. We do know that hedge funds have been big sellers in energy space at this time. So that is a factor here. We could see a short-term bounce in XLE, but broadly speaking, it is now starting to move down. Let's take a look at the energy sector. And what do we know? When you see these tops, it tends to have a big move down. Now, there are some cases where it pulls down, makes a rally, everyone gets excited, and then it comes dropping. So this could be a very short-term window. If you take a trade on this, make sure you use your stop losses to control your risk. We give you the opportunities. Your job is to control your risk. Here you can see it is still coming down. Momentum still trending down on the MACD and the RSI, but potential here, if the machines kick this up, you're looking at a trade right up here into the high $96 range. Let's zoom in, and here you can see on the last 10 days, there have been some buyers here. The question is, how high will they take it? Well, we don't know, because you can see on the 30-day window, they're above. On the 90-day window, well, they're way down there at the bottom. But something else, if you're talking about opportunity and where machines are positioned in a short place, well, Goldman suggests you should look none other than the one place no one wants to look right now, and that's the bond market. And they see a green sweep, and in a big way for bonds. Their CTAs are currently short $324 billion worth of them. You want to make money on the machines? Well, this is simple. You got to buy ahead of them. We give you those signals as you're about to see. Flat tape, $17 billion of buying, not big. Up tape, $54 billion. Down tape, they're really not big sellers here. I'll show you that too. But over the next month, look at this. And an up tape, $451 billion. Or the bonds to buy. These are huge, huge numbers. And one place we look is Metre. We can note that they are heavy short here. Here we can note on the 10-year, 108.47 to buy. Friday's close 108.72. So you're going to start to see some short covering going into next week from the CTAs. And let's take a look at our screens, because we gave you the last signal to buy in on May 3rd. Now, right now, you'll notice we're down on this trade because we didn't use a stop loss. We want to encourage everybody who's trading to do that to control your risk. But what if you didn't and you're in a trade and it goes down? Just use the tools to dollar cost average in. You see here we're down 4.44% with the machines looking to kick. Down 8 consecutive daily buy signals. So momentum has been moving up. We gave you the lead on the machines. We told you our fast algorithm is kicking it up because of the historical overlay we do, telling you the machines were offsides. They're looking to buy. Upside target now, the 50-day moving average. You get a big kick from those machines, it's going to blast right past that. Let's take a look here at TLT. And what do we see? 50-day moving average is right down here. That is the next target. Let's look underneath and see, what do we find? Buyers down here over the last 10-day window. How about the last 30 days? Yes, buyers clearly there supporting this, and you can see it. It looks like a bottom. That means its next move isn't just to the 50-day with the machines kicking in. You're talking right back up in here into that $93 range. And if you can break out of that wedge, well, you'll get these sellers that are net short here to start to turn and run. And that means you're looking at a push all the way up to roughly right around $100 a share on TLT. But that's not the only opportunity. We talk about gold here. Everyone's gone bullish on gold. We did a show on that yesterday with central banks buying. We now see 2 consecutive daily buy signals. Next upside target, looking at the all-time highs. Now keep in mind, the momentum is stretched on this, but the machine's backed off a little bit. So if you're looking to add gold to your portfolio, the machine positioning here might give you a little bit of edge. Let's take a look at gold. It's right here, just not far from that all-time high and looking to make a run. But if you're also looking at gold, well, we'll make it easy. You want to know how to make money at it? Here's our reports. They went back to October of last year. These are the returns. If you would have followed our signals, you'd be at 27% on gold. Check out those links in the description below. Not to mention, check out Griffin Digital Mining while you're there. How about GDX? Momentum is positive. You like the metals, you'll love the miners. Now 5 consecutive daily buy signals on this. Upside target, the 2-year all-time high. Now momentum is stretched on this, mean buyers are eager to get in this. Let's take a look at the charts, because even though we got stopped out, you notice I do keep my stops a little bit tighter than most. That is, of course, how you control risk. Looking at the 90-day chart, you see here, buyers clearly below. How about we zoom in the 30-day window? They are all over this bottom here. Even the 10-day window, they're down here. Buyers are snapping this up at every opportunity, suggesting a run to the 2-year high. Well, then after that, well, we have to zoom out, and now you're talking a big return potential up to the $39 range for GDX. That would be outright massive return. And if you want to know when to get in, well, we told you back in March. You see our CTA program, you see our Momentum Time Pro, you'd be up between the two about 30% if you follow both of them. Again, links in the description below. How about soybeans? What do we know? Momentum is positive. Here is a great setup. We gave this one to our subscribers as well when it came out, and you can take advantage of it still. We had to buy it open on April 24th. That trade is up 3.13%. Now, how do we know to do that? We followed our machine positioning. We followed Momentum Timer Pro. We got that pair trade when they both flipped their signals and said it's time to buy. Now, we're raising our stop loss level right underneath our open price because this is a little volatile here. Now, let's take a look at soybeans, and that's one of the great things about our tools. You don't know what to buy or when. Well, we run it on all kinds of things, so you can find the opportunities when they come available. And you can see when it gets deep into this zone, it tends to take off and rally up here into the $28+ range. Let's zoom in to the 6-month window. You see buyers clearly underneath here. It rallied up, pulled back into the supply zone. I'm giving it a little margin on the stops to make another run up here to 26. Let's zoom in on the 10-day window. What do you see? Buyers clearly underneath there, setting up an amazing potential trade. How about the dollar? Well, things here with the dollar. We took a dollar short position, a bearish position with UDN this on Monday, and now we're down mere 0.5%. But the setup, I'll show you the chart here, because what is the key? We see momentum on the dollar slowing down here. That is potentially bullish for gold as well, and the miners. But let's look at the 10-day window. What do you see? People selling the dollar. How about the 30-day window? They're selling the dollar. We gave you the tools. We give you the reports to make money trading. Makes you a better investor as well. Whether it's your biggest pot of money or maybe you're just getting into trading, use the tools, allocate accordingly.